Hey, everybody, welcome back to the Teaching Tax Flow podcast. We are on to episode 188. As you see here in the title or in the show notes, we are going to talk about the most common form 1099. So 1099, you've probably heard this number a lot. We know we are not talking about the number of years experience that my co-host on this podcast actually has. So Chris Picciurro, welcome back to your own show, sir. Let's dive into this topic, man. It's a good one.
Absolutely. I mean, the 1099 form, IRS 1099 form, is a very, very important form from a compliance perspective. And then obviously compliance leads to tax planning. And a lot of times people, John, most accountants, tax professionals, CPAs, enrolled agents cringe when people use that term 1099 employee. There's no such thing as a 1099 employee. A 1099 is issued to a subcontractor or contract laborer, but there are many different types of 1099s. Okay, let's talk about, before we dive into our top 10 list, why it's important. Remember that every time you're issued a 1099, a copy goes to the federal government, the IRS. And the vast majority of IRS tax notices and audits are triggered by not properly reporting what has been issued on a 1099. So in other words, a 1099 was issued for a transaction. Taxpayer either doesn't know it was issued, lost it, or was doing something nefarious, doesn't report it. Sometimes it's actually to their benefit to report it. And now the IRS issues a notice saying, you have income and here's the tax you owe us, penalties and interest. So it's super important for everyone to understand what 1099s are popular, and it's important to report those 1099s. Now, one of the funky things about 1099s is they don't really report expenses. They are designed to report income or monies paid from one party to another.
So when you say things like you need to make sure they're properly reported and completed, right? So I imagine some people might not know what that is, but like, if I'm just thinking of an example, and tell me if I'm wrong here, right? You might have somebody who's a contractor, not a 1099 employee. Say you're providing services, a bookkeeper, any of this stuff for somebody. Say that person who's issuing payment to you files a 1099, but you don't. You forget about it, you don't claim it. So basically in the IRS, there's a mismatch, which is a whole thing. Right?
Good
Is that
question.
kinda where you're
So
going?
the 1099 is issued by the person making the payment. When you receive a 1099, that doesn't mean you don't go and file it anywhere. You just report that as part of your taxable income on your tax return.
It's like
And
a
that's where
receipt.
matching occurs. Lots of matching issues occur. So that's the vast majority of 1099s. Absolutely. So yeah,
So
let's
really,
jump
it's
in.
a record of a transaction, a receipt at a cashier, or
Mhm.
vice versa. But
And whenever there's matching there and just mismatching, there could be problems. So the top 10, we're going to start with 1099 NEC. This is a newer 1099, but this is the one that's issued to non-employee contractors. NEC stands for non-employee compensation. So for instance, I paid you $3,000 to design a website. You're not a corporation. I have to issue you a 1099 for that $3,000 of service. You have to report that $3,000 worth of income. Actually, if I give you the 1099 or not, but if I don't issue a 1099 to you, there could be severe penalties from the payer. So that's the 1099 NEC. It's a little bit of a newer form because there's another 1099 MIS, MISC, so 1099 miscellaneous, and that's different than non-employee compensation. The 1099 MIS is for rents, prizes, and awards, and like health and medical care, Medicare, health and medical care payments, and basically miscellaneous income. Previously, everything was reported on that 1099 miscellaneous, but here's what happened with IRS. They couldn't figure out what portion of that income was subject to self-employment tax, meaning it's earned income in a trade or business, or passive income. So they created the 1099 NEC to try to differentiate that. So
and even though now there's a bunch more of them, right? I think it's kind of nice that they're separated out. I mean, it makes sense, right? Like,
absolutely, it categorizes the income. And remember, in teaching tax flow, tax agencies are involuntary business partners, and tax laws are going to encourage and discourage certain behavior. So what was happening is the IRS was having trouble differentiating what income on the 1099 miscellaneous form was actually subject to self-employment or the self-employment tax. So they said, you know what, a few years ago, let's just make a separate, this is my personal opinion. Let's just make a separate form so we don't have to figure that out. So yeah, so that's a 1099 miscellaneous. You also have 1099s commonly issued from credit unions or banks. That's a 1099 interest. So if you earned over $10 of interest from a bank account, savings account, et cetera, then you're going to issue that financial institution is going to issue a 1099 to you. That could happen also in private lending. Let's say you loaned me money for a business and I paid you interest. I'm supposed to issue you a 1099 interest, and that's taxable income to you. There's a 1099 dividend, so different than the interest. 1099 DIV, and someone might say, well, aren't interest and dividends both reported on Schedule B, which is the same form? Yes. However, dividends are taxed differently than interest, because with dividends, you could have qualified dividends taxed at a lower rate. The point is, it makes it easier for the IRS to determine what type of income it is. Remember, not all income is taxed the same. We've got a bunch of content on our Teaching Tax Flow YouTube channel, but you might be watching this on there, or you might be listening on any of the Spotify's and Apple Podcasts, all that. But we have a lot of content that revolves around breaking down, $10,000 worth of income that's a long-term capital gain versus self-employment tax versus a qualified dividend versus interest income versus net rental income. They're all taxed differently. So the IRS wants your help. And when we say your help, we mean the community, the taxpaying community's help, businesses' help to categorize that for them, and they put it on different forms. So a 1099 dividend or any dividends or distributions. 1099B, this comes from a brokerage account. John, this is one of the most missed deductions, and it leads to a high amount of IRS, what are called correspondence audits or letters. Let me give you the fact pattern. It happens every year. John, we're going to throw you under the bus. You get fat and sassy, and you go on Robinhood. Should be a sponsor, by the way, so get it together. We liked Robinhood back in the day. You go on Robinhood, buy some stock for $20,000. You sell the stock for $19,000. But Johnny taxpayer's like, well, I didn't make any money, so I don't have to report it. Well, guess what gets reported to the IRS? $19,000 sale of stock. The IRS doesn't. Now, the cost basis is reported, but the IRS software doesn't pick up that cost basis. And they send you a letter saying, John, you have $19,000 of stock sale. We're giving you credit for no cost basis, and you now owe us $4,000. But you're in your mind's like, well, I didn't make any money off it. So I didn't give it to my tax professional to put, and actually you have a capital loss, which could help you. So the
I'm so
point is,
glad that you brought that up, because that is super interesting. Actually, I didn't know that, and it makes total sense, right? Like the IRS looks at it basically a cash balance, right? They're not matching every single transaction, buy, sell to each other. They're looking at it as a lump. So I never thought about
oh,
it that
for
way, but
sure.
that would 100% happen.
And you'll see
So
some clickbait out there where you've got tax professionals or tax resolution firms saying, my client got a letter that they owe the IRS $300,000 and I got it reduced by 50 to 50,000. Yeah, because they probably had $1 million. Think about people that are like day traders or is like constantly selling stock, and they just in their mind think, well, I didn't make any money, so I didn't give that 1099B to my tax professional. The IRS sees $1 million, so they get a letter saying they owe 300 grand. Well, once you properly report the cost basis, they probably owe just a little bit of money.
right. Yeah,
So
you're not
that's
reporting profit, you're reporting movement of
yes.
assets, right?
So the
Hmm.
1099B, common driver of IRS tax notices when it's not, not reported. And this can happen too, like people that are our parents' age buy bonds. They might buy $100,000 bond from the city, get paid 8% interest. They're getting issued a 1099 INT for the interest. They report that properly. They sell the bond pretty much at par, meaning no gain. They still have to report that $100,000 sale. And if
Yeah.
they don't, it could be an honest mistake where they didn't report it, and now you're getting letters from the IRS and notices. So
Damn, I love these topics where I feel like I'm learning something too. This is great.
this is it. Yeah, I know. I mean, 1099s, it's really think about 1099s, or they're kind of some people think that they're a bad thing, but they're like a seatbelt. They actually protect you and keep from getting audited if you just properly report the amounts, and then you've got to figure out what your expenses are. All right, well, we're going to hit number 5, 10. No, that was the fifth one, 1099B. We're going to go to the sixth one, new form, 1099DA. What in the heck? District attorney? Is that for people getting out of jail? No, it stands for digital assets. So the IRS didn't want digital asset reporting on the 1099B. There's a high level of non-compliance in this field. So they said, let's create our own form. Like I said, it's new, and it's similar to 1099B, but specifically for digital assets. The next 1099 is a 1099K. We've had a whole podcast on that. We called it the Venmo tax, right? That's issued by credit card companies, third-party payment companies. So, John, I mean, quite frankly, we use Stripe, right, for our businesses, some of our businesses. So we get a 1099K from Stripe because people are, maybe buying something. Maybe they purchased one of our services and paid through Stripe. Stripe collects the money and gives it to us. Stripe issues us the 1099, and that's on a 1099K.
And I can see those actually. I know we talked on a previous episode about that. I feel like that's one of those things that certain platforms, right? They issue these, even Airbnb. I remember when
Oh,
Airbnb
for sure.
people were so pissed when they started issuing 1099s, right? Because they had to. They eventually had to, and they're like, "Oh, well, now I need to report it." Well, you should have been before. Now they're
Mhm.
just working in not cahoots. They're working within the guardrails of compliance, right?
And there
Which is
could
good.
be right, there could be situations where someone gets issued a 1099K that's not even in business. Think about, I use this example a lot. Think about the Boy Scout popcorn parent or the Girl Scout cookie mom that sits in front of the grocery store and they just says, "Well, just Venmo me the money and I'll give it to the Girl Scouts." And now they have so many transactions, so they're getting a 1099K. They're not
Yeah.
even in business.
I think the
Um,
best example you ever said was, the person who's the best, most organized friend who bought all the very expensive tickets to go see Taylor Swift and told their friends to just Venmo them.
right.
And then they're in business, not really, but, that's a lot of
Hmm.
money.
Can be.
This episode is sponsored by Wealth Builders Mortgage Group, powered by Movement Mortgage, one of the top mortgage teams in the nation and a powerhouse in the real estate investing world. With over $1.1 billion in closed mortgage volume and more than 3,000 investor deals under their belt, they don't just talk the talk, they walk it. Their team specializes in helping short-term and long-term rental investors scale smart with customized lending strategies. They offer all STR loan products, including second home, investment, non-QM, bank statement, asset-based, and HELOCs. They also offer all primary home loan products too. Whether you're just starting out or expanding an existing portfolio, their unique Path of 10 strategy is designed to help you move from a 9-to-5 job to financial independence. If you're looking for a lending partner who truly understands the investor mindset, visit wealthbuildersmortgagegroup.com and start building your roadmap today.
Then you've got the 1099R, that's for retirement distributions. Those are going to be from IRAs, 401ks. One of the things is this could really trigger audits if not done properly. So proper reporting for backdoor Roth IRA contributions. Oh, by the way, check that podcast episode out. Roth conversions, indirect IRA rollovers. These are all things. In other words, John, let me give you an example. If you want to roll money from an IRA, from one IRA to the other, and you do a direct transfer, that's pretty easy. That's reported to the IRS pretty clean. But let's say you actually get the money and you put it in your bank account and you have 60 days and you put it into another IRA. The IRS has no idea that you actually did the rollover. So you get a 1099R showing that it's taxable when it's really not. So in other words, make sure that you provide your tax professional with all of your 1099s if you think it's taxable or not, because there's a way to properly report it. And I see a lot of issues with misreporting of 1099Rs. 1099S stands for a sale of real estate. And typically you're not going to issue that if you're selling a primary home under $500,000. But if you're selling investment property, that's something that's going to be typically issued by the title company. And those are missed sometimes too, John. Like you might close on a property in February, you get the 1099R. Let's say you're doing a lot of real estate transactions and you forget about it, or you moved and you've got kids and you're like, oh gosh. So that could be missed. And then the 1099G, that's issued by certain government payments. So that's going to be like unemployment compensation, or if you got a state tax refund that might be taxable on the federal return. So yeah, the 1099G is it's going to be for mostly unemployment and taxable state refunds. Because if you deducted the state income tax in one year and got some of that back, you got a federal tax benefit, it's going to be taxable in the next year. So those are our top 10. But John, we've got just a minute left and since you're such a excited student today on the Teaching Tax Flow podcast, we're going to give you an extra bonus one.
Uh-oh. So I get nervous when you say that stuff. You saying that to me sometimes is like me asking you or telling you, say, hey, I got a question for you. And like doing it in that tone, you keep a smile, because we're on camera, but I know under the table, you're probably clenching a fist like, just shut up. All right.
Sometimes.
Let's hear it.
Well, you know what? Now, so the bonus one, this is a 1099 that is issued that has triggered several IRS correspondence audits, meaning letters, CP 2000 notices. It is a 1099 SA, and that reports distributions from health savings accounts and medical savings accounts, but most importantly, HSAs, health savings accounts. And here's what happens, John. I have a love affair with health savings accounts now. We contribute to the HSA, right? No big deal. We report that properly. Sometimes it goes through your W-2. But when we have that debit card, that HSA card, we go and use it at the doctor's, right? The IRS has no idea if that's a qualified medical a distribution for qualified medical expenses or not. And typically, the health savings account companies don't mail you a 1099. So at the end of the year, you may have put in $5,000 in your HSA and you might have spent $3,000. Well, the $3,000 you spent is actually reported on a 1099 SA, and you need to put that on your tax return and then report to the IRS, hey, I had $3,000 of distributions, but don't worry, they're all for medical expenses. And a lot of people, just because you contribute to an HSA doesn't mean that you use the money. Many people use that as a secret retirement account. And a lot of times that gets missed by taxpayers. And what happens is the IRS then sends them a notice saying, you took $3,000 out of your HSA, it's taxable, and we're going to penalize you. And then you have to go reply to that and prove that you use that money for medical expenses. So again, my point of this is I gave you a bonus. That's 11. Couple things. One, if you're still listening or watching, congratulations. You get a gold star today. Put a comment in. Let us know if you have any questions about 1099s. And then remember, if you receive a 1099, do not ignore it. Make sure you provide it to your tax professional, or if you're trying to do your own tax return, make sure you take it into account when doing that preparation.
Awesome. And I couldn't make it up. And I swear that bonus one was, I had no clue about that. And here I am. I just, I had to explain to my wife why we're spending $8,000 a year funding this account. She has no idea what it is. The HSA. So there you go. And Chris, through this, and I'm going to wrap on this. Two things came out in this conversation we had. One of them is, I love how you mentioned just giving everything to your tax professional. Let them decide kind of what's needed. Like, right, the taxpayer's job is to present the info. It's the tax professional's job to, disseminate it and see where it goes. But very similar, we talk about things being confusing sometimes. Oh, why are things separated? I couldn't get it out of my mind that it's almost like a receipt sometimes at a grocery store, right? Certain things are taxed differently. Prepared foods are one thing, alcohol's a different rate. You got all these things. Imagine it being all on a grocery receipt and them not breaking apart which ones are taxable by what, and then you seeing the number at the bottom and trying to figure out what goes to what. I'm sure that's exactly what it was like for the IRS, looking at just a regular old vanilla envelope or a manila envelope, 1099, trying to figure it out. They can't.
Right.
So it's tough. But
exactly.
And I think that my little brain's working in overdrive now, so I'm glad I get to edit this and go through it a couple of times. But as Chris mentioned too, we'd love to see those comments. YouTube, Facebook, wherever you see this, anything, drop the comments in there, because I promise you that I have a lot of the same questions as you guys do. So help me out here, for gosh sakes, and ask the questions so I don't have to act like a dummy on a recording with this guy asking all of them. So very self-serving. We appreciate everybody being here along for the ride. Again, we're getting close to episode 200, actually. So that's going to happen in a couple months. We're crossing some huge milestones on community growth, which is incredible. So please comment. Let us know what you want to hear. I love this guy. Literally, he's the closest thing I have to a brother. But, if we got better topics, we have better conversations. Just throw it
Absolutely.
out.
This
So,
one came, this one came from our Defeating Taxes private Facebook group. So we really
Absolutely.
appreciate that.
you pick the topics, we have the discussions, and then you get all the knowledge. So thank you, everybody, for joining us here on the Teaching Tax Flow podcast. See you again next week. Enjoy, guys. See you soon.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciurro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.